Hello, guys. What is happening? And welcome to this live stream. So, today's live stream, we have tons of things to go through. It has just been a wild roller coaster of a ride, as you probably know, in financial markets. And gold is just ripping to the high side, silver ripping to the high side. I think silver was up some ridiculous amount today. I think it was close to 7%, I think, at one point. We're also going to dig into what is happening with the Canadian dollar because I think that's very important. And we're going to look at it in comparison to oil. Now, the thing is, guys, obviously, everything that's happening right now is going to have a knock on effect down the road. All the extra spending that now has to go into gas money and energy money for businesses and households is being drained away from the economy. The other thing that I want to mention is a lot of people just don't understand really how these central bankers think. And, I've read a couple of books which have mentioned how central bankers are schooled. And what people fail to understand really in real terms, and I think it's being hugely underestimated right now more than ever, is that central banks actually believe they can control inflation. I know, scary thought, because with everything that's going on right now, how on earth could you say that a central bank could control it with interest rates? Now, there's some sort of idea that they can control it by expanding and contracting credit, which is essentially what they have control over. And the main people who get hit are the leveraged people. But the thing is, the central banks are starting to get scared. They've changed tone completely. They're losing their credibility. I think the Fed is going to get more hawkish. I think there's going to be more hikes than people are anticipating. And I think that interest rates could go a lot higher than I would have said 2 or 3 months ago. And that is despite what's happening with yields and bonds. I just think people, even the bond market, is underestimating the likelihood of rates going higher. And that is really just inflation. Inflation is obviously ripping right now. And, it's crazy to think what's going on in the world. But the first thing I want to point to is this article here, and it comes from Better Dwelling. So, Canadians will spend another 1% income to cover gas at the pump. So, just think about that for a second, because obviously, spending an extra 1% of their income on gas prices, well, that obviously means that their wages have gone even more negative. And this is exactly what I'm talking about. This has a real effect on the economy. Oil, if it does go to $300 a barrel, which I don't know, it could do, who knows? But no, heating oil, sorry. But if oil continues to go higher, even at the price it's at right now, that is going to be recession down the road. Now, it's not going to be instantaneous. There's still going to be people out there levering up, betting that, everything's going to go their way. And I think the probabilities are firmly stacked against them. And really, I think that this kind of plays into that great reset agenda and idea, because if they really wanted to create you will own nothing and be happy, the the easiest way to do it is by having interest rates raising interest rates, going up and up and up, and making people more dependent on the government through such forms as UBI and other things like that. I don't think we'll ever get there, and I hope we don't get to. I think there's too many people that oppose the Great Reset, and I think that people wouldn't have it. They'd rather lose their home than have the bank own it. But maybe I might be proved wrong in the future. I mean, these sort of ideas have been introduced in places like the UK as well. So anyway, let's dig into this. The global energy shock is driving up the costs higher everywhere, and Canadians can feel it at the pump. BMO Capital Markets took a stab at estimating the consumer impact from rising prices. Their research showed gas was at $1.80 a litre on Monday, up from $1.60 a litre last week. That is just insane. That's more than a 20% rise in a week. Like those increases are going to send the CPI going much higher. But the CPI vastly understates inflation. The thing is, guys, we were heading for an inflationary recession, regardless of what's happened with Russia and the Ukraine and the sanctions and everything like that. And this has been more orchestrated. I mean, the inflation that we had before was orchestrated by politicians, but this even more so. This is just so blatantly obvious. So they are trying to send that inflation higher, I think, and I just think that the central banks are going to come in and raise rates. I know a lot of people are going to say, you're crazy. They're never going to raise rates. The funny thing is, guys, back when I was doing videos last year in August and September and October, I was saying that they're going to raise rates. And I said it was going to be in Q4, like December time. And basically, it ended up being March, Q1 of this year. But the thing is, a lot of people pushed back against me and said they're not going to raise rate. It's not going to happen. Interest rates are going to be low for years, and it's happened. They've started off that cycle now. The question becomes, when does that cycle stop? And then you have to look into, well, where is inflation going? When is inflation going to stop? And I just don't see inflation stopping. So they are going to have to keep hiking, even into a recession, something that we've never seen for at least 30 or 40 years. And the thing is, if they really want to bring down that inflation, they're going to have to hike to real interest rates, which would be, I mean, as measured by as measured against the government's CPI anyway, the phony CPI. And can you imagine what it would have to take to get to that? But what adds to the dilemma is the fact that the DXY, the US dollar, the DXY is the index basically. It's the US dollar versus a basket of currencies. So that has been going up. So everybody's taking flight to the dollar right now. And if you look at the Canadian dollar, it's completely decoupled with oil, but we'll get into that in a bit. We want to continue with this. So rising gas prices can cost households an extra 1 billion a month. Absolutely insane. Rising gas prices can eliminate another 1% of disposable income. Is an extra billion in gasoline costs a lot for the size of the population? When dealing with large numbers, they tend to lose all meaning. So a little context is important. To understand this scale, BMO contrasts the cost to disposable income. Their calculations show disposable income at 119 billion per month in Q4 2021. So the extra gasoline costs will absorb about 1% of disposable income at current prices, says the bank. The good news is the excess savings cushion was 300 billion, but that's mostly high income and rich people. Canada's economy has a lot of plans for the not so large savings pile that's, here we go, held largely by high income households. Those plans seem to revolve around those savings being eaten up by the high cost of living too. So it's quite interesting what they're pointing out there. But, what's even more interesting is this, guys. So this right now is oil, and then you've got the Canadian dollar down here. And basically, oil is obviously, it's been steadily rising at a very sharp rate, and it's been correcting though. But now it's just gone parabolic. Like, this is a parabolic move. And the thing that concerns me about moves like this is you don't know when it's going to stop, but you do know it's probably going to come down just as fast when it eventually comes down. And the reason is because there's just no structure to the market pricing. So it basically ensues fear, panic, FOMO, all those different things. So, and if you look at the Canadian dollar, like, the Canadian dollar has been kind of downtrending slightly, but it has done nothing really, nothing at all. So the Canadian dollar is no longer a petrodollar. Like, that has become evident. So now we have to ask the question, well, what is it backed by? Is it backed by gold? No, they sold the gold reserves. So we are literally in such a precarious place because, as I've said time and time again, the Canadian economy is the economy with so much debt, one of the most in debt economies in the world, one of the most exposed to high inflation or interest rate hikes. Pick your poison. And literally, the population here, a lot of the majority of the population, they are completely brainwashed by real estate. And I guarantee there are still people out there right now bidding over ass for houses, getting into tons and tons of debt, buying rental properties, and all that stuff. But eventually, there's going to be panic that hits when people either realize one or two things. The Bank of Canada is not going to stop raising rates, and they start to think, I'm going to have to cut my losses here. Or they start to think, hey, inflation is going up so quickly that I'm not going to be able to afford the payments. And the thing I think a lot of people are underestimating is social media, the power of social media now. It is definitely become so prominent, especially, like, I would say since 2019 or 2018, whenever the markets just crashed, and it was around Christmas time. It was before the cerveza sickness and everything like that. And ever since then, like, social media and the stock market have been going hand in hand. The same with real estate. So I really think that, yeah, regardless, we're screwed. There is no good result out of this. And yeah, I totally agree with you. Where do the central banks go? Like, high inflation, high interest rates. Like, which one? And which one looks like politicians are doing nothing? Because let's face it, a lot of people view the central bank as under the view of, I mean, even though they're meant to be independent and we know they're not independent, I would say the majority of people on the street believe that the central bank is part of the government. They don't even know that it's meant to be independent. So the thing is, the government looks like they're doing nothing unless they increase interest rates. And that is going to be very, very evident. It's going to become evident because, I mean, the central bank, they just pointed at the GDP numbers, raised rates, and ignored the fact that Canada lost 200,000 jobs in the last job report. So that just goes to show you how they're going to ignore, and they're going to pick and choose basically whatever they want to basically bring in. And they realtors do the same, salespeople do that, and politicians do that, and central bankers are essentially just politicians. Like, that's how they act. So this decoupling between oil and the Canadian dollar, it really leaves the Canadian dollar in a precarious place in the state of the condition of the economy. And I think the reason for this is a lot simpler than people think. It's because people know that Canada is in so much debt. I mean, Forex traders look at the economic data. When you look at Forex markets, I don't really trade Forex markets apart from swinging trades through it every now and then. But Forex markets, the markets move based on all the economic data for the country, the currency underpins. So basically, if the household debt data, if the private debt data is really, really high, pushing the boundaries of what people can afford, and inflation is running rampant, you don't have to be smart to put all that together into a milkshake and realize that is poisonous. That is exactly what is going on here. Like, you just don't have to be smart. And I'm not smart. I don't try and be smart. I screw up and mess up all the time. So, and let's take a look at the Nasdaq real quick, because I've seen again loads of people are jumping into the Nasdaq. They're buying. I mean, right now we're getting towards this support level. So this support level down here. So, I mean, it could catch a bid down there, but what is this going to look like? I mean, it has a long way to go to get back to 2020. Like, it's still at 13,000. And a lot of these stocks like Tesla and all the players in the ARK innovation ETFs, those stocks are well overvalued and they are manipulated through options. People don't realize what's really going on. They fall for all these practically sales type tactics. And for you guys that don't know, I trade financial markets every single day. So the thing is, like, I know about emotions and psychology of markets because it's something that I've had to study in depth before I was able to trade profitably. But before I traded profitably, I lost money like 90% of people do trying to trade. And basically, when I learned psychology of markets and everything like that, and it took a long time and it was tough, I realized that everything that 90% of people do is wrong. they take they take like, you can literally flip the things most people do on their head and you get the result of what you're meant to be doing. You know, a lot of people head into stocks like Tesla. And I use Tesla as an example because people are highly emotional about it. And that is an alarming thing. If you're emotional about something, I got news for you. You should not be speculating in it, whether that's buying for your long term or your short term portfolio, because you're never actually going to be able to get to see things from a technical perspective and just see the patterns that are forming in front of you. I mean, if you like a stock like Coca-Cola and you're a big Coca-Cola fan and you have an emotional attachment to Coca-Cola, so you say, I'm going to go buy loads of their stock, well, then you're going to hold on to that stock. You're going to be less inclined to sell it. This is part of the reason that I have a rule that all the stocks that I'm long on in my long-term portfolio, I don't trade short-term, because again, I found that out firsthand that it clouds your judgment. And that is literally just having a stock in my portfolio and then trading it going long and short is is difficult because of the fact that you have it in your long-term portfolio. So you're kind of biased because you think it's going to go up over time, and you're then trying to fight that out at smaller time frames. It's very difficult. And that is just a tiny nuance of emotions in the markets. But people are well too emotional, way too emotional, not too emotional right now. Poisonous milkshake, yeah. Yeah, that's what we're heading into. But if you look at the Nasdaq right now, like, it has shed a lot. Like, it's in bear market territory right now. And silver, which is what I'm going to go over to now. Let's take a look at silver. So silver hasn't really caught that much of a bid for a while. It's been sitting down here, and we finally are starting to get into some moves right now. And the thing is, this is, oh wait, hold on. I got it I thought this was on a weekly chart. I think that's what I wanted. So basically, that's what I wanted to be looking at. Sorry about that. So basically, if you look at silver, we're starting to finally head up now It's been asleep for the longest of times, actually sat at the year's lows. And as you know, like I've been saying about gold, silver, and all the rest of it for a long, long time. People who followed this channel for a long, long time know that I've been saying about it. And it really took a bottom out in September, and then it came down. People had a second chance to buy, but now it's gone off. But still, it's still not even at the highs. It's still not at the highs, which is around $30. So the thing is, physical silver, I believe, is an incredibly powerful part of anybody's portfolio because you actually have it. Now, the thing is that I want to make clear is if you hold silver and gold, make sure you have it in a secure location. Be smart. Don't just have it in a safe. Gold is going higher in price. Inflation is going up. Social unrest is gonna go higher, and you're gonna see more people getting broken into. And believe me, criminals know that gold is worth more now, so they're going to be looking for people's gold. They're going to be going to your bedroom looking for jewelry and places like that. So just be smart about where you're putting silver and gold. I don't even keep it at home because I don't want to have to worry about that. We actually have a storage unit, and we just keep it in a safe within that storage unit that we have. So, but you can do whatever you like, but just make sure you keep it safe because believe me, crime is going to be going up. Social unrest is going up. So this is what happens when you have really, really high inflation. And now I feel as though we need to talk about this definitely. And this is gold. And gold hit all-time highs today, or pretty much all-time high. Yeah, no, it did hit all-time highs. Or did it? I thought it did, but by the looks of this chart, nearly all-time highs. So we're heading towards all-time highs on gold. Silver is going to play catch up. It always lags behind gold. So silver, I actually bought a number of shares in a couple of silver stock companies, silver miners this week, because even these stocks, like on Monday or Tuesday or whenever I bought them, or was it last week? I can't even remember. No, it was last week. Sorry, when I bought them. I keep thinking it's like Friday. The week is just been so weird this week. But anyway, when I bought them last week, like they were at near the lows, some of those stocks still. And they have good balance sheets and everything like that. And I'm not gonna pump stocks, so I don't put out tickers or anything like that because people will blame you for their own mistakes because people just trade with emotions. They don't take ownership for their own losses, and that's just the fact of have you heard of a channel called Maverick of Wall Street? That rings a bell. It rings a bell. Um, yeah, it rings a bell. Is that just like a channel where it's loads of videos and then a voiceover? Because I think I may have seen that channel before, if it's that one. And then lastly, I wanted to go over MBS. So MBS is mortgage-backed securities. That's basically what it is. Now, mortgage-backed securities, now this is obviously in the US, but mortgage-backed securities are going down. They're about to break 100. So the thing is, when mortgage-backed securities go down, it even tells you their MBS prices are significantly weaker so far today. This strong downward movement in MBS will most likely result in higher mortgage rates today. So basically, just so that you understand, in a risk-off environment where banks don't want to deal or buy mortgage-backed securities, what happens is the price of those mortgage-backed securities goes down because there's more sellers of mortgage-backed securities than there is buyers. So then what happens is the yields go up on those mortgage-backed securities. So basically, that means that the interest rates subsequently have to go up. So the thing is, mortgage-backed securities generally go the opposite way to treasury yields and bond yields. However, in a severe risk-off environment, you will see mortgage-backed securities even that go down, even though yields are actually going down too. So that can happen, and it happened in 2020. Now, it's not happening as of yet, but the price fluctuations when the mortgage-backed securities move down are getting larger than the bumps in the treasury. So there's starting to become more and more of a divergence between mortgage-backed securities and the treasuries and the bonds, and that's something to definitely keep an eye on. And if you want to practically know how the housing crisis worked, then it was basically all mortgage-backed securities. A lot of them were AAA rated and they were garbage. So the thing is, a lot of obviously another thing was CDOs, not CDOs, not credit default swaps. So credit default swaps are like insurance policies. People can buy them against mortgage-backed securities. If they want to buy mortgage-backed securities, but they want to offset some risk, then they'll buy some credit default swaps. Now, the price of some of these credit default swaps has exploded, and this happened right before the 2008 financial crisis. Credit default swap prices exploded. Now, a lot of this is to do with what's going on in Russia. A lot of people are trying to do some basically covering their butt over that. But we're going to see, we are yet to see anything happen in the mortgage-backed securities market. But the thing is, it's incredibly important to keep an eye on this. So if this starts to really tank whilst yields are going down, then we're going to come back here and we'll discuss it. But I just find it absolutely insane, guys, what is going on right now. I mean, we literally are we literally have markets doing U-turns. We have gold up, oil up massively, gas prices going up 20 cents per week. And there's probably people paying over asking price for houses, acting like nothing's happening. And that just makes me laugh. It makes me laugh because I just would love to know, like, what is going on in these people's mind. I find that these people, they're the ones I really would just love if a camera followed them round all day so we could see what was actually going on. Because I don't know, it just seems absolutely insane to me what's going on. But what's happening now in the markets, I think we're going to eventually see some sort of dead cat bounce. The markets are going to go up a bit, but and I'm thinking it's going to happen between now and when the interest rate hike happens, which I think is in a couple of weeks, 1 or 2 weeks, I don't know. So that is going to be incredibly interesting to see what happens. But the thing is, guys, where currencies are going, what's happening with the DXY, gold and silver, that all plays into the hand of a deteriorating market. The wheels are coming off, and we're seeing it happen right before our eyes. So this is not something to ignore. If you want me to cover anything else, stick it in the chat. If not, I'll wrap this up here. But I can't really think of any other things that I was going to go through. I went through silver, gold, Nasdaq, Canadian dollar. Just going to see where the futures are at right now. Again, if you want me to cover anything, stick it in the chat there and I'll take a look at it. Want to go over nickel? Okay, yeah, they're squeezed on nickel. Oh my god. Let me see. I was looking for this in a chart. This doesn't look right. Da, 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 da. So I got the Mexican futures. Is the nickel? I don't really. Oh, nickel spot. Here we go. Holy. Yeah, let's have a look at this. Okay, share this tab. Here we go. All right. I, I mean, if you want to see hyperinflation and what it looks like, then look no further than this. I mean, this is absolute insanity. We're looking at an hourly chart right now, and this is the daily chart. This is literally hyperinflation. And this is happening in nickel prices right now, and that sort of price increase is just absolutely insane. Now, I haven't really dug into the nuance of what's going on here. I've heard it's some sort of short squeeze like GameStop. So basically, it's just lots of people piling in and buying, and then that forces people to cover shorts, which means that they're buying back stock, which then forces the price even higher. And then more people come in, do the same thing, and it just pushes it up, 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 up until it comes back down. But the thing was with GameStop, it got a lot more wildly volatile than that. But the thing is, this is literally hyperinflation. Like when I see moves like this, I mean, this makes me nervous to say the least. Like that is just huge engulfing candles. And like if I if this happened and I mean if you bought here and then you were like after this candle closed and then you bought here, I would not be selling because that candle does not look like it's showing any sort of signs of pullback. Looks like the market's closed right now, though. Yeah, market closed. But I mean, this is just a classic example of hyperinflation. And I'm trying to think of some other things that have just gone absolute. I know soybeans. Soy future is this. But if you look at, is this the one? Yeah, I think it is. Let's so you can see. So if you look at soy prices like before the cerveza sickness and everything like that happened, soy prices were like 954 and now they're basically heading towards double that. Like this is just absolutely insane. It's just really, really crazy to say the least. And I don't really understand how you get any pullback from all these commodities that are exploding in prices. Another one is wheat. Pull that up. Yeah, so wheat prices, this doesn't go back very far, this chart, but you can see again, like this is just absolutely exploded. So like everything is exploding if it's a commodity. So it's just going up in price. It's just this vicious circle we're getting into now, which seems like an inflation spiral. It seems like we could be going into a doom loop, and I really hope that's not the case for the sake of everybody because that is just not a good way to go. You know, the price of fuel, I mean, the price of oil, the spikes that have happened, think about what that's going to do to things like airline companies that are already struggling. I mean, the fact that people buy their tickets in advance, like, and then they can't even raise the prices that much because people aren't going to travel because they're going to be tightening their belts. So it's absolutely insane. Hi, is there an introductory video saying who you are, what your background is? So basically, I've been trading since 2016. I've basically self-taught myself. Well, not self-taught. I've learned from the greatest minds about macroeconomics, financial markets, and everything like that. I basically traded for about 2 years, losing money as everybody does. And I managed to actually find somebody that was decent enough. And he basically told me that you need to study psychology. And it was when I started to really understand psychology and study psychology. And listen, I don't have any sort of degrees in economics or anything like that. And I kind of think it's laughable when people ask for credentials like that, because when you read books like this and they talk about how these people are actually taught, you just laugh, because these people are taught backwards. Like, you go to school, somebody reached out to me recently and they were saying, like, I'm really interested in macro. I want to learn more about macroeconomics. Like, what do you suggest? I'm thinking about doing, some university courses. And I said, it really depends on what you want to do. Like, if you want to go work for an institution or something like that, then yeah, you're going to need those credentials. But are you really going to understand macroeconomics if you go to university and get a degree in it? No, you're not. And that is the scary thing about the whole situation, is we have central bankers and central planners that have been taught economics the wrong way. I mean, the way people like Tiff McClem are taught in economics class is that bubbles like the one we're in right now just occur, and there's nothing that you can do about it. They just naturally pop up and then pop, and there's nothing that you can do about it. When it's pretty obvious that there obviously is things that you can do about it. So it's kind of really crazy. But yeah, so my background, really, I got interested in trading, and I basically made a gamble trade. Looking back on it, there's no hiding that. I basically made a huge trade, and I didn't even know how big it was. I didn't even know how much of a risk it was, thank goodness, because and I was lucky that it went the right way. But this was back when Brexit happened, because I put all my money into Norwegian krone when Brexit happened, because I was sure that it was going to go the other way, and the polls were predicting that Brexit wasn't going to happen, it wasn't going to go through. Yeah, I was out there talking to everybody I knew and listening to people, observing people, which I've always been interested in. And nobody said that they were voting to stay in the EU. And I was just like, the polls must have it all wrong. So I took a bet on it, but I didn't really have my risks defined. And that's why I say it was a gamble. And yeah, it worked out. But had I defined risk or gone through anything like that? No. Now, it worked out to my advantage. And that's where I really got interested in trading. It all stemmed from that one trade. And then basically I got into trading, losing money for years, pulling my hair out. And then I finally found strategies that work for me, and basically learned trading psychology. For years and years before 2020, I was just, making a little bit here and there. I wasn't consistent at all. And before that, I was losing money. So it's been a hell of a long journey, to say the least. And I've learned so much. And macro is so important if you're a trader, and I really underestimated it. I mean, you can ignore it and go purely technical, but you don't really need to ignore it, because if you do learn macro, and I'm no macro expert, I don't pretend to be any kind of macro expert, but if you don't learn macro and you're not constantly learning all the economics of what's going on and what could possibly happen and your risk in certain situations, then it leaves you so much more exposed. Should I take the money out of the bank? Well, that's a question that you need to ask yourself, because it really depends on what you mean by take your money out of the bank. Let's say you have $100,000. Let's have a little thought experiment here. If you have $100,000 and you take it out of the bank and shove it in your mattress or in a safe in your house or whatever, what happens if you get burgled and they take that money? That's everything gone. So yeah, I mean, take your money out the bank, but then what are you going to do with it? Are you going to put it in a safety deposit box in the bank? You know, I think it's very difficult, and I think it's kind of happened on purpose. I think it's very difficult to get your money outside of the banking system. Now, some will say that you should go into crypto and everything like that. I'm not a big crypto guys. I'm not a big crypto guy. Sorry, not crypto guys. I don't know what I'm on about. But yeah, you kind of have to figure it out. The thing that I find works best for me, and this is just me personally, it's not financial advice, is just diversifying into different currencies. Currencies that I have a use for. So basically, obviously US dollars, like if you travel or vacation in the US, then you're always going to have a use for US dollars. So you're never going to need to sell them. And that's basically the crux of the matter. You want to diversify into currencies that you can use so that you never have a need to sell, or you never have that emotional attachment to selling. So because you never want to be in a position where you're forced to sell. So it's difficult. It's very difficult. So it's absolutely crazy. How do you think this plays out? Hello, Luke. Hi, Gloria. How you doing? Yeah, so how do you think this plays out? Who knows? Like, who really knows? But I think one thing for sure, that is a very high probability. I think as inflation goes higher, as gold goes higher, as commodity prices go higher, I think that just means rate hike, rate hike, rate hike until we say, until we see commodity prices come back down, which I don't, I just don't see that happening right now, at least. But until we see commodity prices come back down, I just see rate hike after rate hike after rate hike, and I see like a stagflationary depression on the horizon, a full blown depression. Because here's a scary thought, guys. Imagine this continues for a year, what we've just seen for the past 2 weeks. What would that do to everybody? Okay. So if that happened, it would be an outright depression. And the thing is, you know, like people think that they're laughing because, oh, I bought a house, my mortgage payment is fixed, I'm safe, whatever, or I bought a rental property and I've got rental income, so that's okay, and that'll go up with inflation. But what people really miss is you've got to have a renter that can actually afford to pay your rent. You might get stuck with somebody who goes on rent strike. And I seriously think that's a risk, especially with social media, that we could see people actually going on rent strike. So it is, and that's just the risk you take getting into an investment property when the economy is literally blowing into pieces. So these people, thank you so much. USB in first try, still moving to Mexico if we go into World War III. Basically, my thoughts are I'm going to definitely probably be buying a place in Mexico. I'm not sure when. We're actually going there in June, which is like the hottest time. But we're going there because it's the low season. We want to see what it's like, figure it out in the low season, because the property that we buy there will probably be used as a vacation rental part of the time. And we don't plan to permanently reside in Mexico forever. But Mexico is definitely a place that we would probably be in like 6 months out of the year. But I think we're going to end up in Costa Rica or Panama. And probably just with what I do with trading, it's probably going to be Panama, because Panama has zero taxes. Now, my issue with Panama right now is that they have tons of draconian measures for the cerveza sickness. Uh, However, even saying that though, Panama Panama's good because I think once they actually get rid of all these draconian things, I don't think they'll be coming back there like they are coming back, like they've kept coming back here in Canada. So, and we're looking to go to Panama actually at the end of the year. So we'll see how that goes. I refuse to go there right now because of some of the draconian rules that they've got in place. You have to wear masks outside. I mean, I just, what the hell? So that is just absolutely insane. So yeah, you gotta take it with a pinch of salt. But yeah, definitely Mexico. Mexico's an easy place to move, especially if you're a remote worker. Like Mexico is very easy. So once we're ready, we're going to go there, but we're going to go start checking it out. I'm going to be doing lots of videos for this channel. Anybody who's interested in getting into investment properties in Mexico, I'll show you what you get for your money. It's a damn sight more than what you get here in Canada. My God, I was looking at pre-construction townhouses in Riviera Maya today, and they were 60,000 US dollars. Like a pre-construction townhouse in the GTA is going to cost you like what, $1 million at least, and you're going to be getting negative rental yields on that. Whereas in Riviera Maya, depending on what you're putting down or buying it cash in our case, but the rental yields are good there. Like people pay good money to stay down there, and properties are insanely cheap. But it all depends on what they're doing relative to what they've done in the past, and that's what I really need to go and find out off people locally there, what the market's doing. So that'll be pretty good. What else we got? I just bought my condo and paid it off in 8 years. It's my roof, not a bank account. I have zero debt and invest most of my income. Canadian have crazy amounts of debt. Yeah, that's great that you have no debt. That's phenomenal. The fact that you paid off your condo as well, that's great. That's really good. I just hope it's not a condo with like extremely high maintenance fees like some of the ones in Toronto. And I was there was this foreclosure condo that we saw that was at a place just down the road from us. This was a couple of years ago, and it was going dirt cheap, and it was dirt cheap for a reason though. The building company, and this is something for people to note, like in Toronto, because I think this is coming. This sort of thing is going to start happening. Is basically the building company had gone bankrupt who built the building. The building had loads of, well, it needed loads of repair work basically. So they had to jack the condo fees up to an astronomical amount. Like it was eye-watering. I think it was like $1,200 a month in condo fees, and there was no facilities, guys. You weren't getting like a pool and a gym and all that sort of stuff. No, 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 no. This was just a condo, and that was it. And yeah, 1,200 per month. But I honestly think that'll happen in some places in Toronto. You're going to get these builders that go bankrupt, and then there's going to be situations like that. And then what happens when people can't pay? And that means that you get into this vicious circle again. People can't pay, they have to jack the fees up more people can't pay, and you just go round and round and round. But congratulations to you, and looks like you're in Calgary too. That's great. And paying it off in 8 years, that's fantastic. So well done to you. Costa Rica sounds pretty well established for gringos. Mexico should be okay, but knowing Spanish would be more useful, I think. Depends where you are, like Riviera Maya, Cabo, those sort of places. You just need to know a little Spanish. And if Tony Robbins, I love Tony Robbins so much, and read lots of his books, been to UPW, all that sort of stuff. But Tony always says the best way to learn a language is to immerse yourself, to just go to that place and you'll pick it up. And I totally agree with him, because when we went to Corsica in France, which is a French island basically off the coast of Italy, barely anybody spoke English there. And we learned French pretty quickly, at least enough to get by. So the thing is, I know like getting these apps and trying to learn it at home seems all well and good, but in my opinion, I don't know Spanish. I just know a couple of words here and there. but I'm sure I will pick it up, just like we picked up a lot of French whilst we were there, because you hear people say stuff and then you want to find out what that means. And then you go look and then you remember it for next time. And that is how you really learn, or at least is how I learn. I'm more of a practical learner. But yeah, Costa Rica is extremely safe. You know, Costa Rica, there's a girl I follow down in Costa Rica on YouTube. I forget her name, but she's actually built a business now on helping expats move to Costa Rica. But Costa Rica has got a huge expat community. Lots of people move there. So that's a really good place. Mexico's good. But you're just kind of constrained to those certain areas in Mexico. That's the thing. So that's why I would never live there like all the time, because you don't really have much free roaming space, and it's not as safe as, let's say, Panama or Costa Rica, which are just really, actually really safe. So yeah, so it's really it came, but yeah, it's just absolutely insane. There's always a catch. Nothing is perfect. You need to be realistic. Exactly. Yeah. It's just exactly like that. Can't agree with that anymore. We've all got to be realistic with what we're doing. I was in Riviera Maya in 2006 when huge hurricane occurred, force 5. Maybe housing is cheap, but after a hurricane, you have to rebuild everything. Yeah, I mean, a lot of the places there have stood the force of these hurricanes, and you buy insurance for that anyway. The thing is, you can buy a house here in Calgary, and the hail damages it. Like the house we're in got massively damaged by the hailstorm last year. So it can happen anywhere. Like weather extremes happen everywhere. So you're never going to get away from that. I mean, places like Boquete, I think they're near volcanoes. So even more so. But anyway, guys, thank you so much for being on this live stream. I'll love you and leave you. Thank you all for coming. It's been a fantastic discussion and chat. Thanks for the super chat. And I will see you in the next live stream. Leave a comment below after this live stream finishes of what you'd like to see in future live streams, and I'll try and include it. Thanks a lot, guys. Take care. Bye-bye.